Welcome back everyone to the next video in the course. This video is titled The Different Phases of Market Movement. Okay, we'll teach you how to spot when to get in and when to stay out of the market. Okay, understanding the different phases can help with that. Okay, there are the three main phases. Okay, the first we will go over is the bearish trend. Okay, and again, right, this kind of goes back to the structure video. So this is a bearish trend. Okay, and the further you get into the course, okay, you'll learn, that you don't have to get in at the top of these, right? You could get in on, your Fibonacci's and stuff, and you'll learn those the further you go with the course. And you can get in on pullbacks, but you'll get to that in the second awakening. Okay, so you have the three phases. The first is the bearish trend, okay? And that's when you have price coming down, right? Ooh. Go. Okay, more lows. Okay, you have price making these lower lows. Okay, you also have it making lower highs. Okay. Okay, so you have it making lower highs all the way down as well. Okay. Okay. And that is your bearish trend. Okay, so you would have your initial high comes down, creates a lower low, lower high, breaks, right? Lower low, lower high, lower low, lower high, lower low. Okay, that is a bearish trend. Okay, that is one phase of the market. Okay, the next, okay, is a bullish trend. So you have your initial low, right? Price pushing up, creating higher highs, right, and higher lows. You have something like that. Okay, so you would have your initial low, okay, which is located there at the bottom. Okay, when price went ahead, pushed up, okay, you now have higher highs, okay, and you have all of these higher highs form here, okay, and then you also have okay, your three higher lows get formed as well. Okay, so that is your bullish trend. Okay, going back to structure, it is also a phase of the market move. Okay, now the next one that we are going to go over is going to be consolidation. Okay, and how to spot consolidation what it is. Consolidation is when the buyers and sellers are equal, okay? Price is kind of fluctuating in a range, but not too far in either direction, okay? It's really staying consolidated in a range. So for this example, right, let's draw up a bearish. Let's draw up a bearish trend. Okay, so you would have price kind of do something like this, okay? Right, price is doing something like this, okay? So when it goes into consolidation, right, and the reason that it does go into consolidation before just continuing down, right, or pulling back and continuing, it's to accumulate orders, okay? And what I mean by that, by accumulating orders, right, price is in a range and it takes the orders, okay? It takes all these people orders because some people are probably like, oh, we're at the bottom. We're going to buy up here. Some people are like, oh, yeah, let's continue this trend. It's going to keep going down. So people are selling. And that's what causes price to range, okay? So it would be, like in a range like this, and price goes back and forth before it finally, makes up its mind and decides which direction it's going to go, okay? So when price ranges and it consolidates and moves sideways, right, what it's doing, it's accumulating everybody's buy and sell orders in this range. Okay, it's waiting to see, because the banks and the markets can see these things, right? They're waiting to see where everybody's going to place their stop losses. And like, if you're selling, you'd put your stops, above the previous lower high, and if you were buying, you'd probably put it below the previous low. So it's waiting to see where all of these stops are, so they can go trigger them, okay, before actually making that move to whatever direction it decides to go to. Okay. And a lot of the times it will hit that stop. Okay. So how can you spot this, right? Price ranges low to high, but the lows and highs never get broken. Okay. So it would look something like this. Let me go ahead, delete that. Just for the time being. Okay. And let's choose a different color. Let's choose blue. Okay, so price would do something like this. Okay. It would range, it would go up, but it would never, right? It wouldn't go up to that high, it wouldn't go up. It'd push up towards it, not break it. Price would come down back to the low, but not break it. Right, comes back up to the high, but doesn't break it. Okay, and I mean, this could go on for days, hours, depending on the chart that you're on. If you're on the 4 hour, the daily, right, be days, right, possibly weeks. Okay. How you can spot this, right? Once you start to see, because you were in a downtrend, right? You start to see it move this sideways move. What you can do, and what I like to do, is I put a box around it. Okay. I make it yellow or red, and that just tells me, hey, stay out of the market. And how I'll put this on there, right, is wherever those highs are and those lows are that aren't being broken, I will do it around that. Okay. And as long as price is within this region, I am patiently waiting, okay, to see what goes on. Okay, let's make it red. Okay, you're just patiently waiting to see what goes on. Okay, what I'd recommend is, trading the London and the New York sessions. I'm Central Standard Time, so giving it to you in Eastern Standard Time, like 7 a.m., 8 a.m. Trade those sessions, about like 3 hours before the open, okay? Because what usually happens is this. All right, and let me do this. Okay, like what usually happens, because the markets know, okay, where people have their stops set up. All right, so the market knows this, okay, and they know that the first set of traders are probably going to have stops, you know, somewhere up in here, right? Smart ones are probably going to have their stops above, right, that previous structural, right, lower high, okay? So what the market usually likes to do, and this usually occurs, you know, a few hours before the session opens, or, you know, a few hours before London or New York session, depending on the pair, and things of that nature. But what occurs a lot of the times is this, right? There'll be a stop hunt, and price will push up, okay? Okay, like even if it like barely breaks it, but it'll break, right, that previous higher low, or even top it, and then do something like this. Okay, and then it actually goes and breaks out. Okay, that happens a lot of the time. So you've got to know this, because they can see our stops. Okay, the banks and the bigger companies, they can see stops. So you've got to think about that as well, and not be the average retail trader. Okay, like I said, when price is in this region, you know, we are not going to trade when it's in consolidation, right? Because what could it be happening? You know, we would want to wait for further confirmation before we would buy into this trend. Okay, same thing. We don't want to, you know, have our trading and be caught in any of this at all. Okay, that's not good for us. It's not good for our trade accounts. Okay, so being patient, being able to spot, you know, this sideways movement when the market is ranging. Okay, if you trade the Asian session, you know, it happens a lot in the Asian session. Okay, the market, you know, moves sideways like this. Okay, and it would be the same thing. Okay, if you were in an uptrend, right, you'd be in an uptrend, price would go up, you know, come down, come up, come down. Okay, it would try to wick low, okay, instead of high. So there's that example. Okay, let's look at, you know, a bullish example. Okay, so you have your bullish phase of the market. Okay, and realize that a lot of the time before this consolidation happens, okay, it happens for a reason. Okay, because the market can only go in one direction for so long, okay, before it needs to either consolidate or change direction. Okay, so like how it could happen, right? You could have something like this, price turns, you know, okay, and then it could begin to do something like this, right, ranging back and forth. It could try to come down, right, and let's put our box up here, right, price, because they know that traders are going to have their stops where, right, below that previous higher low. Okay, so what could happen? You could see something like this, right? Right, you could see something like that, okay, in a bullish market. And it happens a lot, right? Because these institutions, they make money, by stopping out traders, and that's how the brokers get their money as well. So, they can see these things, and they can see where these traders' heads are. Okay, so that's something to always pay attention to as well, and keep on the back burner. So those are the 3 market phases. Let's go ahead and remove this. This is the daily chart, okay? And let's take a look. Let's see if we can't take a look here, and just kind of see a good example of this, okay? So, all right, you can see, again, this is the daily chart. You can see those, those strong bearish, okay? You can see over here, right? Strong bullish, okay? Phases. And then the consolidation, right? Maybe this, right? What's consolidation here? You can see where it's ranging sideways for days, okay? Kind of ranges sideways before it continues. It's like that stair step, okay? It ranged. And I mean, if you come over here, right, you had price push down, okay? Push down, right, and you be around there, okay? So this case, right, you didn't have that that push up, okay? You did kind of have a false breakout here, right? Price pushed back in, began ranging again. Okay, maybe another false breakout here, right? Began ranging, wicked up high. Okay, this is a daily chart, so you can see that is a good inclination, right? Big wicks can tell you that it pushed up here and began to come back down. Okay, wait another candle. What do you see? Right? Boom. Maybe you want to wait another candle. Okay, there you had a breakout and a retest. Okay, so boom, now you're in the trade. Okay, and you continue your trend. Okay, but staying away, because as you can see, right, from the 30th of September 2014, it was in this range until it was ready to finally go in January. Okay, and that's on the daily chart, of course, but it can give you a very good idea of what's going on, right? So pay attention to these different phases of the market and not get caught up in these consolidation phases.